Here we go, guys. In this video, we're going to take a look at the NASDAQ. And one of the main reasons being is that it's generally one of the quicker markets out of the Dow Jones, S&P 500, the top three broad markets that everybody watches. It generally breaks out and breaks down, quicker, faster, runs a little bit quicker than the other two. So anyway, we're going to take a look at this, kind of give you, this is a weekly chart, kind of give you an idea. Here was the COVID slam down, and then here was our the big, rollover here, and starting in October 2018, and you know the story there. But what's interesting, we were just talking about on the previous video, the way markets reverse. You have that V, and then your W, low, higher low, and then, where you drop, and then you trade sideways, consolidate, kind of move up, get far and away from that traumatic experience, and then you start moving up, okay? So what we're going to look at here, so that's pretty much a V, and then we started getting into, our W's, or really this could have been a long, pretty long expanded W. Definitely a V here at the COVID slam down. And then right here, down, up, down, made a little bit higher low there and compared to those. And then we ran up, pulled back, so on and so forth. Okay. But what I'm showing you, I had a bear. If I put everything back on here for a split second, see, we had a bear here, thinking we could have gotten a rollover last week, but instead, hey, this thing is still running and gunning. I'll show you a few things that we might not be, well, by the, looking at it, we are extended over the 20, hadn't touched it, since March, the week of March 13th of this year. Of course, the we price had not come down and actually hit the 200. I mean, we came close here. I guess you call that, if we were playing horseshoes, that's close enough. But really, we hadn't touched. The last time price touched it was back here, 2010. And of course, through here, oh, that's still 2010. And a low, high, higher low, and go. See that low pivot here on it, a little bit higher low. But anyway, yeah, it's been quite a while, uh, since price actually hit it. And then the 20 coming down close. This was, close, but didn't hit it to that again, 2010. And then we actually rolled over 2008. Everybody remembers that. Well, the banking issue, I mean, it was like everything was awry. So here we go, and we're getting somewhere. Hold on, okay. Now, as you see, let me take that bear off because man, it's still, it's still summer. Um, anyway, so far from the last green candle that touched the 20 up into where we're trading right now, it's 133 days, okay, that we haven't hit it. Here, from the last green candle that touched it to the last green candle before we started rolling over, 105. I'm going to take that off. 98. Uh, make sure I take off the right thing here. 112. See, we're at 133. Here's 98. Take that off. 126. So we're getting close. Back here, that run up in the end of October 2019 to February 2020. And then here we have to go back to um, in July. Actually, it ended here, September 2018, 147 days, above the 20, and then 176 days above the 20 last time. Yeah, May of 2017. So let me take those things off. So you have to go back pretty far to get a run. In other words, we have run up, pretty high before. In other words, a number of days above. But really, we're pretty close, getting pretty close to that, before it came back in. And then I don't know if you remember me from time to time, I talk about, uh, remember me talking about like a trend line and then price hitting it, like if it's coming down into it, support one, two, three, very high percentage of the time you'll get a bounce off the third, and then it's the fourth or fifth time that you start crashing through it. Okay. Same with resistance. So, one, two, three, and then it's either the fourth, fifth, that you start, pushing your way through it. Okay, I mean, you're gonna think I'm crazy here, but anyway, as we move up, okay, there's the breakout here. Of course, obviously you're gonna be right at the 20, but so maybe you can call that one, two, three, four, five. Yeah, it was the sixth time that we hit it, that we broke through it. And right now, even if you call the breakout one, two, the third time that we hit this, that we come back, we should bounce. Okay, based on that theory and logic. Okay, and then here we go again. You know, well, we broke out, came back one. Well, let's just go ahead and count that one, two, three in this area, four. Then there was the COVID, slammed down, five. And then this is a huge run up, after we kind of double bottomed here. And then we came up. So, wherever you want to start, one, two, three, the bounce. Looks like we touched here, four, five, six, seven, eight, broke through it, but not for long. And then it was the ninth, 2018. Now that was a big pullback. But we still, you know, relative to everything else, didn't pull back that bad, because I'm gonna see how. Let me see which one it's always okay. Sorry. I think they're moving this on me. I don't, probably not, but anyway, that was probably a 23, 24% pullback, but and it ran. I don't want that one. I want the day. Okay, from this little double bottom, then we broke out, so let's just call it there at the very low. We're started breaking down. Okay, obviously I didn't get the right thing. Date. Okay, from the low here. Okay, man, I'm losing it. Okay, right here to where it started breaking down. Wow, that's a long, wow, 900, over 900 days. Okay, so few years there, and then finally broke, came back. Here we go again. But and also what I'm getting at, the horrible, big pullbacks, that all of us remember. Wow, even going back to from, the dot-com bubble back here and the big drop. Once we made a huge pullback, we never, well, let me make sure before I say never. Yeah, as far back as this goes, 85. But anyway, uh, big dot com pullback. Never came back and took it out. This one, 2007, 2008, everybody remembers that. Never came back, took it out. Once we bottom took off. All of these major moves to the downside, we never came back and took them out. So do we call this I guess we can call this a major pullback. I mean, so maybe, people are calling for a retouch of this COVID slam down. Price range from the high to the low here. Let's just call it 30% for even round number. And then the low here, 37%. Okay, 7% more. And then if we run from here, and see, we haven't, even if you call this is, to me, this is not really this first break of the 20s. Now, this is the first touch to me. Okay, you broke through it, came back, touched it, you know, each time you came back and hit it. And like here, we came under the 21, obviously 2, I don't know if you call that 3, came down 4, and then on the fifth one broke out. Or it could be the fourth one, depending on how you count it, okay? So, yeah, we haven't even hit it the second. Now, remember, in drawing a trend line, 2 points, 2, like, well, the easiest thing, see them real clean here. High pivot, high pivot. I mean, that's technically, according to classical technical analysis, uh, that right here, 1, 2, that's a reliable, valid trend line, okay? And then, we hit it here, 1, 2, 3, and then the fourth time, there's when we, technically is when we broke out of that trend line anyway, okay? And you can go back and back test this theory, 2-minute chart up to this weekly chart, however you want to do it, and you'll come up with pretty close to the same, well, you would come up with exactly the same conclusion after the third hit. Now, sometimes, yeah, it'll break through the third hit, especially on that 2-minute chart. But these bigger charts, a lot of times that third, I don't know what the percentage is. I'd say it's over 80% of the time, you'll hit it and bounce. Uh, could be short-lived, might not take out the previous high, as you're coming down, but still, and we had, technically, we've only had one hit. So I think we're good for a second one, maybe even a third one. And where are those going to be as we move up this thing? So anyway, that's just uh, a thesis, and we'll see how well that comes to pass. And then everybody, the S&P 500, man, I'm done with the bear. Okay, let's see what this thing. They even here, 1, 2, valid, reliable trend line. And I mean, if you want to call this a little bit of a bounce, because we did, you can. I mean, well, it did touch it, so yeah, 3 and then 4 came down. And even if you talk about the 20, after you broke through it, 1 hit, well, obviously 2, 3, and then the fourth that came down through it. See, and then here, once you broke out, 1, 2, 3, 4, the COVID caused it. Okay. So anyway, just, take it for what it's worth. And anyway, see, 1, 2, valid, reliable trend line. And who knows, maybe S&P 500. Oh, can you imagine, people? We break that 20 and come back into this trend line up. Oh my goodness, yeah. Yeah, we should get a bounce. I don't know if it'll take out the previous high. For example, if it started rolling over next week, okay? Came down, hit it, bounce, got back over the 20, bounce. Now, will it take it out, or will it be uh, one of our famous M formations where you come down? It won't come straight down. It'll travel like this. But anyway, down, up, because you can't take out that previous high for whatever reason, then you come back down, then you have that, M formation as opposed to your bull W, you get that bear M, okay? But all right, guys, thanks for watching. Thanks for being members, and we will see you on the charts.